Hey everyone, it's your hosts, Marcus Norman of the Gentleman Style Podcast Show. And today we have an incredible lady here representing her firm that is giving back and helping businesses that are trying to build out their group insurance policies. And she is a true expert in the space. Over 40 years of experience changing the game, changing the landscape for commercial and group health insurance plans for big organizations, small organizations, and medium-sized organizations, and everybody in between. Her negotiating firm empowers businesses by reducing their premiums through skill negotiations and achieve 98% success rates, lowering group health plans and commercial insurance costs by 20 to 60%. And she's here to hopefully spill some tea. She said yes to being a guest here on the show today. And she's here to help us peel back some of those unanswered questions or those common questions that business owners have when potentially trying to offer group medical benefits, dental benefits, life insurance, health insurance, those types of things. And she's here on the show today to help us peel back some of those layers and get your questions answered. I'm going to do my best, y'all. I'm going to do my best to get those questions answered for you today. So, Miss Andrea is coming to the Gentleman Style Podcast stage. I can't hold this lady back any further. Help me welcome to the stage the incredible Miss Andrea.
Thank you. Appreciate it. I love the cheers even.
Absolutely. The fans are going wild for you. Ma'am, you are a force to be reckoned with. You have been doing this for a very long time. And with many years of experience, many years of wisdom, that wisdom, you can't teach that in a classroom. That's boots on the ground, working and serving businesses and individuals in a large way. But I gotta ask, when did you know that you had the gift? What kicked this off for you and realize you had this superpower that could speak to the health insurance industry? Because I get people all the time. I don't understand it. I don't understand my policy. I don't understand my plan. And on the flip side, businesses don't know what health insurance, what business insurances they need, what they can offer their employees. When did you realize your superpower in this capacity? When did it kick off for you?
You know, truly, I think I've been an entrepreneur since I was a kid. I mean, I literally sold seeds door to door from a comic book, right? Sold lemonade and all the fun stuff that kids do. And at 12, I wanted to be in business. So that's all I knew. But I will say that in retrospect, I think as we age, we start realizing that we do have superpowers. We have innate talents that we didn't know we had until we've actually been in something for a while. So I've always said you could throw me probably in any industry and I'd find a problem with it and I'd figure out a way to fix it. So there is insurance. Insurance had all kinds of problems. And I literally had a business partner of mine who came to me and told me some of the guys were outselling me as a commercial insurance agent. And I am competitive. I used to be a competitive athlete as well. So it's one of those areas where I dug in and said, well, what isn't working? Why? And in that moment, I found that there were things that didn't work that I could solve and present that to clients so they had what they want. And I got what I wanted, which was success and revenue from doing what I was doing and offering something better to clients so they got what they want. And most clients want to pay less for insurance, get the same or better coverage, and remain with their agent and or carrier of their choice.
Absolutely. Love it. What are some of the common misconceptions that you have seen over your years of wisdom? What are some common misconceptions that businesses struggle with or oftentimes don't even know isn't available besides you and your firm? What's something that business owners overlook and it's right in front of them when shopping for? And just to be clear, I want to ask this question to preface it. You educate clients on health insurance. You don't sell it, do you?
Nope.
So you educate clients on the various things that they have access to when shopping for health insurance and commercial insurance, like
Correct.
business insurance, like to protect their assets or
Yep.
liability.
Yep. Workers' comp, general liability, commercial auto, the liability, anything having to do with the business insurance from the they call it property and casualty insurance. And then I also do the benefits. It's very unusual to find a person in the insurance industry that does both, but both were broken. So why not fix both? And I was asked all the time, can you help me with the health insurance? And it's like, as a matter of fact, we can. So we do both.
Absolutely. Absolutely. So you help educate them and then they go out and find the policies that match what you taught them on.
No, I actually find the solutions. So negotiations is really about the power to walk away. I always tell
Mm,
people it's like buying a car. If you want the yellow Ferrari and one dealership is selling the yellow Ferrari, they can charge whatever they want because they're the only ones in town selling it, and you've already told them that's what I want. So they're going to charge you whatever they want. Now, if I have 12 dealerships that have a yellow Ferrari, well, now the market's mine, right? I get to choose the deal I want. And maybe that's only one piece is the price of the car, but the others might be servicing of my car, certain details that I want added to the car. And then that gives you the power and the leverage. So what we give consumers is all the options, and we procure them by where we know we can get them. And then we can use them as leveraging, or they could take one of the offerings. And sometimes clients come to a conclusion that they've been underserved by their current agent, because when you start seeing a 40% savings and you've never seen it before, you kind of go, well, wait a minute. How come my agents never brought me options like this before? So one of the misconceptions is that lower price means lesser coverage or lesser something, right? I'm losing something. And that's the biggest misnomer. I'm meticulous on making sure that coverage is equivalent or better than what you have. And on health insurance, here's the key one: I'm keeping your employees whole. I don't raise deductibles. I'm not changing co-insurance so they pay more. In many cases, I've even given clients, I just did one, their employees now don't have a deductible, and the employees saved money and the client saved money. Pretty amazing, because how many of us can say, I have no deductible on my health insurance? It's like, that's a pretty good deal.
that is gold, right? And that is especially in this in insurance realm where people are getting surprise benefits or benefits they didn't know they had, and on the flip side, accruing costs that they didn't even know were there.
Right.
Uh, and so that's 10,000% of value to those. So the companies reach out to you to help educate their team on why these plans are superior to what they may have previously had, or why they're a plus. Do companies pay you to come out and do that?
Marcus, remember that the system's broken.
Yes.
So the agent oftentimes doesn't have the solution, or maybe this is always my thing. Maybe they do, but they don't want to show it to us because it might actually take away some of their revenue, or it might be more work. Okay, that's in the back of my head, because I can't imagine that my experience is that only 3% of the agents out there bring the type of solutions we bring. 3%. That means there's a lot of agents out there not really doing their job. This is on health insurance. Property casualty is a little bit different, but the health is probably the most broken in that agency arena. Okay, now let's shift to who else is handling insurance? HR. If
True.
if they have to move to a different carrier, that's a lot more work for HR. So they're not always inspired to do it. They've done nothing but work with insurance agents, even if they moved from company to company. But what are the chances they ran into the 3% agents that actually know how to move the needle? Probably not very high. So many in HR don't know this is possible. Again, I just did an account and the CFO told me, Andrea, here's the problem. The HR didn't want to continue with the project. And he said, she doesn't believe that you can get the savings you said you could. And I told him I saw $100,000 to $300,000 of savings. And I said, well, I'm fine with them not believing, I just know what I can do, right? That's all I can tell you. So if you want to see it, let's continue. You don't have to do any, you don't have to take anything. Like there's savings and you can choose it or you can not choose it and there's no risk. And I'll tell you why that we work that way for a reason. But we ended up doing it. I had savings from 130,000 to 375,000. Okay. They took a lesser reduction option, which is fine. And their agent could not implement it. They had tons of questions, couldn't figure it out. And so they said, okay, we want to use the broker you brought this program with. And I did. And it's being implemented as we speak. And their employees don't have a deductible. We eliminated it with this program. So the options are there. Now, how is the process? Well, our system is we're only paid if you save money and we share in the savings. Pretty easy. And there is no pressure to take something. If you choose not to, that's fine. So to me, we first do an evaluation. Do we think we can save you money? Because we don't take deals we don't think we get that are good. Matter of fact, we give them a high five and say, "Oh my God, you found one of the 3%. This is awesome. Go on about your day." Right? There's no value of our work. Now, in health insurance, I mean, 99% of our clients save money. In property and casualty, it's about 98, but we're running about 99% on health insurance. So it's just a matter of how much you're going to save and which option you choose. And for us, it's important to clarify what those options are. Some have risk, like if you went self-funded, that would have a little more risk, right? And then other ones are not. But those self-funded quotes, when they're good, can be used again as leveraging, to get that shiny, car that you wanted, right?
That Ferrari.
That
Absolutely.
Ferrari.
So in this broken system, we hear the words often thrown around. We've been definitely seeing it in politics. Fiduciary responsibility. Why aren't the insurance brokers, the agents, not meeting that's the safeguard? That's the safety net that's supposed to ensure that this is for the business's benefit, right? They should be doing the right thing because of that fiduciary responsibility. And how does the messaging around it shake the industry? I feel like it's a bad word now when you say you have a fiduciary responsibility to do right by me. What?
Actually, I know. Actually, there's an interesting thing going on, which is so every time you do your continuing education to keep your insurance license, we find all this work that we have to do about education. And it's funny, it tells you exactly what an agent is and a broker is. Unfortunately, we've conflated the two. A lot of times your agent, and not to throw any under the bus, but there's large ones like the Marshes and the USI and the large insurance agencies. But they'll say, "Oh, we're a broker." A broker literally means you could go to all the companies and they work with a bunch of different companies and they're representing you, the client. But the problem is that there's a sleight of hands in that conversation. The minute, and I don't know if most people don't understand this, and agents put it even on their marketing page, which drives me crazy, is that they will say, "Well, we represent you. There's no reason to go anywhere else but us because we represent all the markets." Well, they don't represent all the markets. They don't go to all the markets, nor do they have the best relationship with all the markets. So part of the problem is once they take a dollar from an insurance company called the commission, they are the representative and the fiduciary of the insurance company. So they literally just switched sides. And most of your agents out there do take money from the insurance companies. They get commissions. So that changes the dynamics and they literally become an agent. And an agent represents, yes, their client, but the insurance company, and the fiduciary is both, but it is for the insurance company as well. A actual broker is supposed to represent the client and be fee-based. Guess what we are? Fee-based.
Right.
So truly fee-based. And it's a different fee. It's percentage of savings. It's a shared savings. So if you don't win, I don't win. And by the way, sometimes there's options where there might be, like you might take a higher deductible on something. If you're taking a higher deductible than what you currently have, I'm going to share in that risk with you. And I'm going to make an educated option to you to say, look, you've never had a claim that's been over 50,000, that's been $50,000. You haven't had any claims in 10 years on this particular line of coverage, and you're going to get $100,000 of savings if we take the $50,000. So maybe we should roll the dice, because that's a pretty good deal, right? I'm getting $100,000 savings for taking $50,000 of risk, and I haven't had any claims in 10 years.
In my track record.
Right. But let's say the year that we're working with you, you do. Okay. Right. You didn't save 100,000, you saved 50,000 then, right? So the savings is only 50,000. So if we have situations like that, we share in that risk as well. And we only make recommendations that we say are relatively safe and that you can look at it and say, yeah, that seems like a good deal to me. I mean, I had people that insured their tools for their company, and the tools were like $2,500, but they're paying $1,500 for the insurance. It's like, and yet they've never had a claim. I'm like, that's silly.
Right? Yeah, but you're paying. You could just simply replace the tools from what you're paying.
Put the money in the bank. Sometimes insurance is just out of whack for the coverage that it's giving, right? And unfortunately, consumers fail to think about that. And sometimes the agent, because it just increased the premium, isn't pointing that out because it does no benefit for them. Now, a good agent should do that. And there are good agents out there that do that. But the reality is, do you know if you have the good agent? Do you know? And so a lot of times we take on an account. I get the actual policies. I actually read them. And there's some where I find that the coverage isn't as good, and we'll fix the coverage and it costs nothing. I just had a client where their renewal was November 30th. Well, their agent always showed up like a week before the renewal. So basically, Thanksgiving week, they show up. They're trying to leave. People are trying to go on vacation, take a long one, and extend it with the holiday. And so we did two things with this client. We reassigned their renewal date for a date that wasn't in a holiday so they could have better access and availability. And secondarily, we also made the agent accountable to bring that renewal 15 to 20 days before the renewal. And we actually give them a bonus if they show up like that. If they don't show up like that, no bonus for you. No. No.
I want to stay on this train of thought for one more minute. As far as this goes, what about you share? It sounds like what you do is the true fiduciary, because you share in the risk and the savings, and you walk it out together and say, oh, I could see why that. One of the things I remember with a couple, I used to many moons ago do insurance. I was auto, fire, life, and health annuities licensed. And I remember a couple who had came to me and was like, man, we're spending so much money in health insurance. And I said, okay, real simply, who has a better policy? Well, my husband. I said, okay, can you realize the wife, I'm telling this to the wife, you realize you can opt out of paying for the premium because you're on your husband's plan, right? You're on your husband's plan. You guys have been married for, 20 years, 30 years, over the moon. Not saying divorce can happen at any phase in life, right, but the likelihood you two, what's your relationship? Oh, we go to couples counseling. We're doing well. Business is thriving. But can't the wife just opt out of your policy, and that's $400, $500 in savings that's going back into your household? And what it sounded like to me is they wanted transparency, but no one had ever told them that. She was paying for her policy. He was paying for, and it sounds like that's what you do. Hey, you both don't need this. You're both overpaying, and one's a superior policy and the other isn't. And you both don't need it, but you're covered on each other's plan. That makes no sense. What would you say to that couple or those individuals?
Well, and I still, you have to look at the plan that he has and see whether it's viable and good as well. And yes, for a consumer, they may think a policy is better one way or the other. I mean, and sometimes they are, sometimes they aren't. But the problem is there isn't good access there for a lot of that information. And by the way, I mean, I check on AI all the time, right, to see if it knows something new.
Right, right,
And it just spits out the same rhetoric that's been out there forever. Shop different policies, right? But
right.
it doesn't tell you where, how, or who. Um, and for example, I mean, yeah, I mean, if you're taking insurance from your employer and your husband's taking one from his employer, or you have an individual policy and your husband has a group policy, you do have to look at both of those and say what's the best deductible, what's the best cost, and which one is the best option. There are some, and once again, we're going to go back to, if only 3% of the agents are really doing the job, a lot of those group policies are going up every year and the agent is not negotiating it. I mean, we literally have the stats on how much agents typically negotiate the renewal. And each group policy, basically, you can talk to companies. So, does your insurance policy normally stay flat, go down, or go up? And of course, the answer is, well, it goes up every year,
Goes
right?
up. Yep. Yes.
Okay. And then we look at historic, how has your agent done in the past? Because I also want you to understand what your agent is or is not doing. And let's say their average increase for a company of 100 people goes up about 8% every year. Okay, that would be normal and average, by the way. Now, it's not good, but it's normal and average, and they call it trend. I hate the word. What trend? Why would my insurance just go up every year 8%? You don't know what the claims are going to be. You have no idea.
Right.
But then the agent comes in and says, okay, we got an 8% renewal, and they wave their magic wand and it goes down by 2 to 3%. 2 to 3% is the average negotiation that an agent brings to the table for a group policy. Now, our savings is 10 to 35%.
Woo!
So
Woo!
um, it just goes to show they're not really bringing much to the table. Um, and I do have clients who will tell me, I said, we're going to get some self-funded quotes because they're fully insured. And they're like, well, we don't want to go self-funded. It's too risk adverse. And I'm like, you don't have to take it. It's leveraging. People, use the leveraging you have. Most people live in the health world of there's 5 carriers or so, which is Cigna, Blue Cross. If you're in certain states, Kaiser, there's always a regional carrier. But you end up getting these one-off, like there's only 5 carriers to shop, and there's more than that. And self-funding gives you that opportunity to expand it. The downside is that many of the agents can't negotiate self-funding to save their life. So it ends up being higher than what you're paying when you can't use that as leveraging. There's no leverage there. If it's
Because
going to cost.
they don't know how, or they're captive agents to only selling what you said mentioned earlier. I
Yeah,
receive a higher commission from this agency, so I specialize in their policies. So yes, I have a fiduciary responsibility, but this is who pays me. This is who puts food on my table.
a lot of them don't know how it works. They don't know how to negotiate it. They don't have a relationship with stop loss carriers. They don't know how the PBM, that's the pharmacy piece, works. Um, and even if you're self-funded, I have a college that's self-funded. There's $7 million available for them, and they're already self-funded. And I mean, it feels criminal what the agent's doing. As a matter of fact, their incumbent agent basically told them they would charge them an extra $150,000 to shop their insurance for them. And if I told you the agent, they're one of the largest in the world. And I'm like, I mean, I'd like the account to be done because I think they should file a complaint with the Department of Insurance, because it's to me, to hold your client captive and tell them that the only way you're going to shop a piece of their insurance is, which is what they hire you for in the first place, is to manage and know where to go and how to negotiate it. They're going to charge you $150,000, and the colleges are hurting right now because they have a tuition decline.
Mm, mm. That is a hostage situation if I ever heard one.
It is, and it's bad, and I've never heard of that in 40 years. I've never heard of an agent saying I'm going to charge you more to shop your insurance. I think if this client was understanding that that would never happen in property casualty, it certainly shouldn't happen in the benefits arena either. Um, but
But I hear the pushback. I hear the pushback, what you said earlier, where the agent is saying, well, the reason why we're charging this increase, or why it's common to charge an increase, is because you're getting older, or I'm getting older. And the cost of taking care of me as I age is going up, right? Just like property and casualty, like you mentioned, like, oh, the materials that you bought that house today is expected to cost more in the future. So is that false? Is that a false statement? Why they give the 8% increase? Why the agent? eh,
because for every person that's turning 62, by the way, I mean, retirement age is 65, and a lot of people do take that, and a lot of them go off and go to Medicare's got some steep penalties if you don't enroll on time. Then you pay a penalty. So a lot of people are kind of incentivized to do the Medicare. Yeah, the regular um, insurance through a group program is better. And so you do have people that are older, but tell you, most of the people that stay on it are the owners of an organization. It's not, you don't have your 70-year-old typically on a health plan with a group policy under a business. So guess who's coming on? The young people are coming on too. So you still have the balance. There are some populations where you look at the census, right? And it's like, whoo, wow, 80% of this group is 60 years old. Yeah, you're going to have more problems. But you know what? Insurance companies don't care for? Um, this is interesting. The groups that have the most claims are health related. So they're a hospital, a community health clinic, and all that. They use more drugs and more procedures and more stacking of drugs than almost any other, occupational group.
Really?
Yeah. And they're the least healthy. I
That's
mean, their
it's
numbers are not good.
it's always been that way, or this new research and new data that's coming?
Here's how you know it. I work with quite a few community health clinics.
Ah,
And a lot of them have unions. So some of them can't change certain aspects of their group plan. And there's no way for them to increase revenue. They're a community health center serving the underserved. That's what they do. A lot of it they have quite a bit of government funding for what they do, and they offer to low income areas and providing health resources. And the unions also require that they can't make any changes to the plan. So as these premiums go up, I mean, the agents can't shift the burden of deductible to the union members, so the non-union members get that shift, or the organization has to increase their cost by 10%. And sometimes you're talking about $2 or $3 million. 10% is $300,000. How do you make that up every year? I mean, that's a tough one. So
it is.
when you want to use self-insurance as a leveraging tool, it's also hard to find the stop loss carriers that will actually give us a good price because they know they have a lot of claims.
Absolutely.
So,
You guys see the level, the knowledge. You see, I work hard for you guys to find this level of professionalism, this level of expertise. This is huge. One more round of applause for Miss Andrea. I want to flip it to their savings for a company that has an existing plan or health insurance cover. What about the young startup, the young business that never offered their employees or their staff or their team members or their even contractors, never offered any, but want to be able to? What options are out there for them? What should they do? Because I think that's a barrier to entry for some businesses. I've heard and experienced myself where, hey, you're not big enough. You're not big
yeah,
enough. I need you to have a minimum of 15 employees. Well, the startup doesn't have that, but
right.
I have to compete with the big guys, right? In order to get to recruit top tier talent, and I can't get involved in these group plans because I'm too small. What
Yeah.
options, if any, are out there for them?
Well, a lot of small startups, especially you get this in the tech, but it really would work for anybody where you're going in to you need to hire employees and you realize no one's coming on board because I'm not offering health insurance. So, the owner usually has their own insurance. They got that. They knew they were going to have to do that because they're going to, be bootstrapping their company, while as they grow and build that amount of revenue that they need to expand and to add other things. So sometimes they just go, okay, I'm going to hire this person. They're going to make $50,000 a year, but we have no health plan. So sometimes they bonus them out or they give them an additional amount. So the job's 50,000, but they're going to give them, an extra $300 per month to subsidize. Go find your own plan. And on the ACA, I mean that works. The other option, and there is this option called an ICRA. And I think you can do an ICRA with 2 to 3 employees, where basically it's a set contribution. So you figure out if you want to pay 50%, you find the plans in your particular area, and you can say, okay, 50% would be this amount. So I'm going to do 50% of the lowest plan available, but you can choose any plan. It's kind of nice. Like if you don't like Kaiser, which is in California widely, and it's usually the least expensive plan, you could choose Blue Cross because you like Blue Cross and you don't want Kaiser. And you have the money or the capability of having that nicer program. Your husband's gonna chip in on it or whatever, the additional amount. And so you have that. There are a few other options. A PEO, a lot of small startups will do a PEO. So they're going to handle the HR, which you probably don't have either. Help you with enrollment, offer other things on the platform, dental, things like that. They might be voluntary, but at least they're available there. And they might even handle the workers' comp, and they'll offer you a health insurance plan. Here's the only problem. Sometimes as companies grow, I just ran into one, and he's with a PEO, and I think he has 5 employees. And I actually gave him an option that might work and that we might be able to do in his PEO if they're willing to do it. This will save him some money. And I said, or you could do an ICRA. But as you get larger, that becomes more clunky and not as stabilizing, quite frankly. There's better plans out there, but you can unwind yourself from a PEO. I do it all the time. I shop PEOs for companies. So if they're with a PEO, and that's a professional employers organization, and it was done basically for startups, because who knows how to handle this insurance thing? Who knows how to handle HR? You've seen these platforms, what is it, Bambi, or they'll take yours if you're a small number of employees, because no one understands HR when you start up a company. It's probably not what you designed yourself to do. You're building something or a product and trying to sell it. You don't want to be stuck in HR, which you could stand a long time in.
So from my understanding, the ICRA is good for startups and the PEO is good for startups as well. But the PEO has a caveat that includes a HR capacity to help the employer and my team shop for a good plan for them within the PEO. And the ICRA, 50% of the what's the 50% based off of an ICRA?
You actually just need to provide some coverage for your employees that you're contributing to. So that may sometimes be a flat dollar amount. It has to be but usually what you do is you take a plan, you find the least expensive plan, and that could be like you're going to offer the bronze plan. So maybe it has a $3,000 or a $4,000 deductible. And that's the plan you're willing to cover. But not everybody with a family is going to want that, right? Because that's a lot of deductibles for a 2 or 3 person family, or certainly a 5 person family. So they may choose something that's a silver or a gold plan that has a lower deductible. But you're going to get a contribution from the employer of, say, if the premium for the individual is, say, $700 for the $4,000 deductible plan, they may be giving you $400. So you'd go to the other plan, you'd have $400 to use to any plan that you want. But you can see that's still not awesome, right? You're still paying a lot for health insurance. And some people will opt out of it. They'll say, no, I'm not going to do that. I'll go on my own because I can find something else that's more competitive. And there are now these medical share programs. They're not insurance. I think they're possibly risky. So I don't recommend them for people that have any health issues. A lot of them don't have pharmacy. So if you're going to take terms drugs, it depends on your philosophy around health insurance as well.
When I hear you say medical share programs, it reminds me of Christian share ministries, Christian share plans.
Yep, they started in that, but there's some that are more, they're kind of more eased, because some of them literally said, you have to sign that you go to church every Sunday, right?
Yeah.
I actually am on a medical share program.
You're what? Really?
Yeah. But you have to understand, I'm an ex-athlete. I am almost 61. I have had a baby. That is my medical procedures. Woohoo! Right? So, and I didn't even take the drugs. I mean, I had it naturally and I left the hospital. I'm done. So, if you're living a life like that, you kind of say, well, at 60, you know what health insurance costs? It's $700-800 for something like a $5,000 deductible. It's insane. Right. And I don't use the coverage. So let me maximize that times 12, right? That's pretty pricey, right? I'm $8,000 for something that I basically use $300 a year because I get a blood panel and check in with my doctor, say, how are we looking this time? Oh, we're doing good. Numbers are great. Have a good life.
Here's the check. Yeah.
And you have to realize that if you break your leg or something like that, if the program works, it'll work fine. My problem is that I don't use it because I don't have any medical conditions, and nor do I seem to break bones. But I could afford to take care of setting my leg if I wanted to. And there's also a cheat. The system that they set up with the ACA allows people to use it in a different way. In other words, if I had cancer and I decided I wanted to go through every medical procedure and I didn't think the medical share program would work for me, I would just have to get till January's open enrollment and buy the very expensive insurance because there's no pre-existing conditions.
I want to give a little bit more sauce to this for those that are considering a Christian share program. Like she greatly broke down. They have requirements, and you need a professional to help you navigate those requirements. I've heard of things, prime example, like women who have children out of wedlock. It doesn't apply to Miss Andrea because she's already had her children. She's past that, right? But for a woman who's not living a certain way, right? That would not be appealing to you if you have children out of wedlock and then you're filing for reimbursement for medical procedures that had to be done, right? You have to have that baby. They may not, because you're submitting requests to the program, and the members of the program are looking at the data that was submitted, what you submitted, and they're making a decision on whether to pay out and how much. And if you had a child out of wedlock, they may not cover that medical expense.
Correct. You have to read the print. You have to understand what's covered, and you have to understand what's not covered. And then you have to deal with, are you doing things, I think, ethically, because they could deny it, right?
Yes.
So, and it's not insurance. They very clearly tell you it's not insurance. But it's something when I have individuals who call me, I'll say, okay, here are your options. And they're not great. As an individual insurance doesn't have great solutions. And it's even worse solutions for those that don't have the capacity to deal with those large deductibles. So when ACA came out, you could actually, and this happened like early on, I think I was out of an insurance program. And so I bought a temporary policy. And I had savings in the bank. So I could buy a $10,000 deductible emergency only type coverage, right? And I did. It was like $136 a month. Wouldn't we all pay that? Like if we knew we were healthy? You can't find those and you can't buy those anymore. They don't allow you to, for the most part.
Wow.
So they did go up, and they went up on our young people too, which I think is, they basically surcharge them to pay for people like me that are older. And we do have an issue, is that we do have a unhealthy population. I look at the data. I mean, it's called the trigger report and the nurses' notes. So everybody on a particular plan who went to the doctor all have what they went to the doctor for, and on the side it tells me everything else that's wrong with them that's noted in their file. And you go, wow. A group of, I think we had a group of 380 people had gone to the doctor, but all of them were pretty bad, including our young people, our 17-year-olds and our children. And a lot of women are in there as well. Women go to the doctor, by the way. Men don't, unless a woman pushes them to the doctor.
Which is sadly true. I myself, I served in the United States military, and when I went to the doctor, I didn't make it a point, even though medical was free. I didn't make it a point, and then I discovered I had an ingrown toenail when I got out, and it was really bad. But men don't go to the doctor until it's absolutely, hit the panic button. So you're right. Men do better, right? We got to take care of ourselves.
Go get a blood panel, man. It'll save your life.
What do you recommend for the CEO? That same startup, right? It's a startup, but a CEO, maybe husband and wife, mom and pop, trying to cover health insurance for themselves. Are there options? Do you still recommend an ICHRA for them as well, or are there specialized plans or options for a CEO or CEOs or C-suite level executives?
They can typically, you can't have a husband and wife in there. You're supposed to have like one employee usually, and then you can include yourself and you have two. So that makes you a group. That's how most of them work. Some have restrictions where they need at least three. Two is often, you can find ones for two, but you have to you're including yourself as the owner. Owners don't have, well, and I will tell you this, there are a couple of other options. Associations. It's hard to find, but if you can find an association having to do with something of what you do, like there might be a business consulting association, there could be a manufacturers association, there could be a builders contractors association. A lot of associations have started for small businesses or owners, where they have an insurance program, and sometimes it's more competitive than the open market because they're buying kind of a group policy and they wrap it around their association members.
Ooh,
so that's what we do. It's a challenge searching for them, because you got to sometimes you have to think outside the box. Because if you are a contractor, you go, oh, there is a contractors association. So you go on their website, start looking for the benefits of being in the association, and they'll say insurance. Look at the insurance, see what the cost is if they have a health one, and see if that works for you. But if it doesn't mean you're dead in the water. Well, what kind of contractor are you? Electrical? Awesome. Try the Electrical Contractors Association. Try the Drywall Contractors Association. Try, you could literally find associations that are Black. They have Black associations, for Black business owners. I mean, you have to look beyond what you think of initially and go check them out. And I've done this for clients where I said, maybe there's an association we can get you into. And look at what the rates are. Some are good, some are not. And even as an individual, sometimes you can get into one of those. So,
is that like a chamber of commerce type? My local chamber of commerce.
You can look there too. I haven't found too many in the chamber of commerce. Some do have them. There were some rules around associations a while ago, and they said, well, you can't form an association for the sole purpose of insurance. So the associations usually do other things, but insurance is one of those things that if they have other services, they can start an association for insurance purposes. I'm not telling you they're great. When you can stand on your own and be on your own merits, there's more opportunity, but it will give you cover until you get to that point, until you're at that growth space. Absolutely. I will tell you on the small businesses, since you asked, and I love small businesses. It's where I started. And I mean, they could be totally small. They could be 5, they could be 20 employees. I don't know how many times as an agent I found this, where someone would call in and I'd take the call and they'd say, gosh, I just want to get some other insurance quotes. And I talked to them. Actually, I had a friend that was this. She says, can you help me with my insurance? I said, yeah, I'll give you the solution. You can do it yourself, or I'll do the work, but I'm going to charge you my fee. I'll give you a discount because you're a friend. She goes, no, I can't do it. I don't have the time. You do it. Okay, great. So she was a small sock manufacturing. She had the socks made for triathlon. See, I told you I was in triathlon. My friends call me. So they made the socks overseas, got them imported or whatever, and then they sold them. And she actually had a physical location, and they were requiring insurance, liability insurance, to be there. So you know what she bought? She got a liability policy because that's what the landlord required. Right. It was $1,600.
Whoo! For socks?
Because she had to provide liability for
the building
that she was actually locating the socks in her office in. Okay. Here is the problem. She called an agent. She's small, and the agents don't make enough money to care, which is sad. And all your agencies you've heard of, the national firms, usually have to make a certain amount of premium before they can handle your account, says corporate. Okay. So they have no interest in doing it. They'll send you to a small business unit and you get basically customer no service. You've heard of customer no service, right?
No, but it sounds terrible.
So here was the problem. Because she didn't say she needed property coverage, she just said she needed liability coverage. That's what they gave her as a liability policy. She literally could be put on what we call a business owner's policy. It would give her loss of a business income. It would give her all kinds of bells and whistles on it. She'd get property coverage, and she'd get the liability coverage she needed. Guess what that policy cost?
$2,000?
Nope, $600.
What?
I took her premium from $1,600 to $600. The sole reason is the language she used, and the agent only listened to that and didn't ask any inquiring questions. And the agent would have made more money by selling her something that was more expensive. And she got more coverage with something that she really needed, which you want some property coverage. And a lot of those policies have all kinds of different bells and whistles, like backup of sewers and drains. That happens a lot to a business who's in like one of these concrete tilt up office buildings. You know, the sewers back up because of a big rain. You have no coverage. On that policy, she would have coverage. It's not a ton, but it's some.
Yeah.
So the problem is that agents sometimes don't do the proper digging to help the client. They just simply sell them a policy. And I find this all the time in small businesses. So, and I always take phone calls for businesses that like, well, I just want to see if my coverage is right. And sometimes it's too small for me to help, and I'll make a deal. Like, look, I'm going to charge you $100 and I'm going to tell you where to go. Does that work for you? Right? Because it's like, for me to do our reports and everything is very not efficient for certain size accounts. But personally, I hate small businesses being ripped off because they just simply don't know, right?
Absolutely. Absolutely. America is built on small business.
Absolutely. There's more of them than all the large businesses. But I also found that the large businesses, even the publicly traded, sometimes have terrible, like the agents have equally hurt them as well.
Absolutely. Absolutely. Another round of applause for Miss Andrea. What's one clause in group health contracts that most HR leaders even overlook that you have found to be like it's already in there? They just didn't know that they had it? What's a clause in a group health plan contract that you found to be really advantageous, and it's almost common? It's like routine to put it in a clause, but they just don't know about it.
That's a tough one. Do
That's
you
a
know,
that's
it's really a tough one because most health insurance is looked at um, by deductibles and all that. I mean, the ACA had a great benefit in that we got rid of pre-existing conditions. That was a clause that was, I mean, it was just problematic. I mean, think about a child who's born with a problem and you can't find insurance because they have a pre-existing condition. They didn't choose that condition. The mom and dad didn't choose that condition for their child. And yet you couldn't switch insurance or you couldn't get insurance with it. And that's been eliminated. And I think that's something that needs to be kept because it's valuable. Also, people that suffered from a cancer, but they got better. They've done their screenings and they're all fine. Same thing. You can't get insurance because you used to have cancer about 10 years ago. That's not really fair. And a lot of times those provisions were not allowing people to get coverage. Those are gone. That's good. That is not the case with those medical share programs, though. They do have some provisions on there about pre-existing conditions, and they usually make you have a waiting period before they'll cover anything. So you have to be insured with or covered with them for a while. From a group policy, I mean, I'm always concerned about the commission. The agents don't always tell you what commission they're getting, and by the way, they get bonus dollars. And what's interesting too is on all the ancillary lines, the group disability, group life, or whatever, the commission spread can be 2% to 80%. And some, by the way, and we always do this on if you don't know anything about life insurance, the life insurance products were sold a lot of times as the first year is 80% and then it gravitates down. So the agent's getting less and less. So why do life insurance agents want to sell you a new policy? Or you might need more, right? Or this one's running out, let's buy another one.
Right.
Because they make more commission in the first few years because they do this gravitating commission. That happens in the group policies as well.
They're front loaded?
They can be front loaded.
So that is adding to the additional costs that most people that you pay, we pay, I pay up front is the insurance agent's commission.
Right. But the problem is that most consumers aren't seeing it, asking, or knowing. So what we did with health insurance is we actually created a grid, what the agent on the national average should receive as far as commissions. And by the way, we change agents to fees, not commissions, because if the premium's going up every year by 8%, I'm not giving the agent an 8% raise for what? Because medical costs went up. They didn't do anything.
Right.
Again, we go back to why agents aren't making changes to policies to save dollars is because they like the status quo of going up every year. Think about you're an agent, you have 20 nice accounts and they go up by 8% every year. Not a bad business, is it?
Not at all. The Ponzi scheme of insurance, the Ponzi schemes of how often should an organization be auditing, much less reach out to you? How often should a company be auditing to make sure they're maximizing savings?
Couple different ways to do it. We have a 2-year agreement. And I think that that's nice because we got this question all the time is like, well, how do I know they're just not going to take it up next year? What do I do the next year? So I get savings 1 year, but what happens after that? And I'm like, well, it's one of the reasons we have 2 years because I'm going to show you how to maintain it if we got good savings the first year. And you'll have a better education because the first year you're kind of not sure what we do, right? It's like, okay, I'm going to trust this. There's no way to lose. That's how most of my clients have told me. I did this because your contract has no way for me to lose. And I said, good, then you read it. That's good. Because it's designed that way. It's a business in which you can't lose. So why wouldn't you do it? Because I wanted it to be easy like that. There's no upfront money. There's no cost. You don't want any of that savings. That's fine. Now, there are people that are not on the up and up. So I have a clause that I can audit if I think that you basically took my information, did it behind my back anyways. I never have to do it because people with this kind of a business, the majority of people are like, well, this is cool. I mean, I've never seen this before. That's what I get all the time. Why don't more people know about this? And it's like, well, you have to be on more podcasts, I guess. You have to be on Marcus's podcast. That's it. So the reality is that a lot of our clients do 2 years, but ironically, we'll get them back sometimes in 5 to 10 years. They'll say, hey, I think we need to look at this again, Andrea. Or we want to extend it for a 3rd year. Property casualty is a little different in that if you don't go out to market at the minimum every 3 to 5 years, you're usually going to be abused. Just the reality. But we're strategic in the way we do things, and we're looking at the price. We know what the price should be. So I'm not out there just getting quotes. I'm driving the price point because I know if you have a fleet of 20 vehicles, I know exactly what they should cost if your claims are average to good.
Right.
You know exactly what the price is.
But also to that effect, a business may grow. A business that has a trajectory to grow. So I could see you saying, hey, or me even reaching out to you saying, hey, we got some savings this time, but when you hit 15 employees or 20 employees, and when you hit 30, we need to relook at this. So I see that where you put that stipulation every 2 years, but there maybe an additional clause is, hey, if you grow to this size, we need to reevaluate because now you may not be saving anything.
We offer at the end of our 2 years if people would like an annual contract. And the experience, not everyone takes it, but of the companies we have, like I did a Sprouts Farmers Market, and the growth was going and the premiums are coming down. And I always have to have this conversation with the client saying, it's never going to be free. This is going to stop at some point. Like, I can't give you free insurance. I can't find that. But what's interesting is the market ebbs and flows, right? The premiums go up in certain areas. Oh, there's fires. Oh, there's hurricanes. So property, we're driving property. Cyber claims are up. So cyber insurance is more expensive. That does happen in the market. And agents play on that to increase the premiums. The reality is it really going up? And sometimes I just did a publicly traded company with, I think we had 15,000 locations. And this was we're getting all these hurricanes and stuff. Their agent was telling them, hey, the price is going to go up. We've got all these storms and everything. Very sophisticated insurance program. But I looked at it and went, that's not happening. These premiums aren't going up. As a matter of fact, they asked me, how much do you see? And I said, $7 to $12 million in savings. They said, how come you see that and our agent can't see that? And I said, because they're telling you about everything that's bad in the world of insurance. And I'm telling you, I'm looking at your account and that insurance company is making a ton of money off you and you don't even know it because you don't know what a loss ratio should be. You're listening to propaganda from an agent who's more than happy to increase it. We saved that client $7.2 million on their insurance. Now, your smaller clients aren't going to get that huge of a savings, but there still may be the same type of savings in proportion to their size. And it's important to look at if there's no claims. I just had one. It was 2 vehicles. Now, a lot of people can relate to that. They had 2 vehicles. They were charging them $5,000 a unit, so $10,000 for 2 commercial vehicles. And it's a retail clothing store. We found another company and another policy, and it was down to $5,000. So 50% right there. Boom, done. That isn't the right price point for that account, but sometimes it's harder to find the whole package, right? You can't just separate that auto or whatever. And we're still working on that account. We're going to go for a year or 2. We started and we only had like 30 days to turn it, but we definitely got savings. And it's about knowing where the price point was. They hadn't had any claims at all. But what a ripoff to be charging these people $5,000 a year for 2 private passenger vehicles in their business. It's ridiculous.
That is ridiculous. I need to backtrack and backtrack a little bit on this. Huge, huge savings. Huge savings. This has been an epic conversation, Miss Andrea. I thank you for what you do. I thank you for how you're changing the world and changing the face of business. You have shared so many nuggets today, so much insight, so much wisdom today on the Gentleman Style Podcast Show. For that young entrepreneur whose back is against the wall, we're in a very charged climate right now, especially in the where United Healthcare is being sued, Anthem is being sued, and this lawsuit, and in this very Medicaid is going away. Well, Medicaid is here. What would you say to that entrepreneur who wants to do something, make a change for the better for their business, getting health insurance for their employees, get the proper insurance for, what would you say for them being overwhelmed in this cluster of State Farm agents and Geico agents just flooding the market? What would you say to that young entrepreneur right now watching you?
Well, I always say there's people that know, and you have to seek out the people that know and be open to it. Like I said, most people believe that this sounds too good to be true. Something must be wrong. It must not work. There must be a catch. And sometimes there isn't. Some people actually create businesses that are pretty straightforward and simple. And there are a few people that do what I do, not a lot. But you have to seek them out in no matter what it is you're trying to find a solution to, and be open to the conversation. I get lots of emails that are absolutely not relevant to my business, but the ones that are relevant to your business, take a 10-minute phone call, find out what they have to offer. Once you know they're not offering nothing else that anybody else is offering, then yeah, you can let them go. But every once in a while, you do find, a golden nugget out there, and you have to be open to it. We didn't know about iPhones and all that kind of before it came along, and now it's like, wow, how nice to be able to do business on the road while I'm heading to the airport, right?
Absolutely. How can people connect with you? How can people find you? How can people get on board the train?
They can visit our website. We do offer a free evaluation, so you can upload a past proposal from your insurance agent or a current one. And we usually will get back to you within 48 hours and say, here's what I would recommend. We can help you. We can't help you, but here's some suggestions. And we try to do that relatively quickly. And I think everyone should have their insurance looked at and either get the high five and move on your way, or go, yeah, there's some problems, and I think you have a 20 or 30% savings or a 60% savings on the table. So you can go try and do it yourself, or you can come on board and let us help you.
What states are you licensed in or able to operate in?
We can operate in all states. I actually do some work in Canada and Mexico too. We end up getting some international clients every once in a while, and I do have a background doing that as well. But any state that we're not licensed in, like I haven't done any work in Alaska yet, so I haven't picked up an Alaska license. But it takes a whole 2 weeks to get a non-residence license, and I'm ready to go.
Absolutely. There you go, y'all. Connect. You have no reason not to. Take a look. Have her take a look. Have her and her team take a look. It doesn't cost anything. All right, y'all. We gotta let this fantabulous woman go. This rock star. She says she's 61. I don't believe her. For those who are audio listeners listening, she looks fantabulous. All right, we gotta let this incredible woman go. We are unfortunately out of time, but check her out. Get on her website. That's www.ratecraft.com. For our audio listeners, check her out. www.ratecraft.com. Check her out. Get on board and get your company some much needed help and savings. All right, y'all. Like we end every show, take care of your friends, take care of your family, and always take care of business. This is Marcus, your favorite gentleman, and the incredible Miss Andrea signing off. Love you guys. Bye.